We are moments away from witnessing one of the biggest events in crypto, and the excitement is building up much faster than everyone had initially thought. However, this should not be a reason for some issues within the space to be swept under the rug and dismissed without being properly discussed. Even though we are seeing a recovery from last year's decline in the past months and the whole market is basically gearing for the merge that's to come in Ethereum, it is important that we remain aware of the current state of these problems because they might just hamper the growth of our community. We do not want these problems to get out of the frying pan and into the fire, right? Welcome to Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss it. In today's video, we will be talking about the Fed and what they have been or have not been doing to make the crypto market flourishing. As a somehow necessary body in the regulation of crypto's economy, the Fed is something most of us should be aware of in terms of the actions they are doing to keep bad things at bay. We are more than ready to discuss it with you, so let's get started. It is not news to many of you that inflation has caused several markets in the world, including crypto, to suffer. This friction is felt as the inflation rates go higher and the crypto market continues to be volatile. So despite the positive relationship that has been generally viewed in terms of crypto and inflation, it feels as though the former has become a little challenged as well. If you do not already know, the Feds had announced their plan on implementing quantitative tightening in order to ease out the inflation and get the markets back to their normal functioning state. This basically is a process where they are going to reduce the liquidity that there is in the market, deflating their balance sheets and keeping the economy from heating up too much without having to inflict a lot of damage on the financial markets. It should be a good thing, right? The crypto market might not be in trouble because the Feds already have a plan laid out to stop the inflation from being too damaging. But that may not be the case, unfortunately. We all thought that the Feds had already started this whole quantitative tightening and the balance sheets are now being reduced, causing the money freely moving in the economy to also drop down. We are pretty optimistic about it. But it might not be what is actually happening. Despite the plans to do all these things, the Fed appears to not be taking the necessary steps needed to realize the goal of decreasing the money in the economy. In the last 3 months that have happened, the opposite of what they vowed to do is happening, meaning they are actually putting more money in the economy rather than work to diminish it. As a result, the prices of coins suffer, and the market has been more destabilized than ever. Based on relevant data in terms of the liquidity of the US dollar, the liquidity is behaving in a manner that is upward. It goes up, so it must be good, right? Well, this behavior is relevant to the balance sheet of the Fed, which, if you haven't guessed yet, also shows some increase the same way the liquidity of the US dollar did. It is only one of the three factors, the other being the decrease in the RRP and the TGA, which are also tied with the liquidity's behavior. Despite the Fed saying that they are putting their best foot forward in order to get the market back to its stable state, the three factors previously mentioned certainly depict otherwise. And we are now seeing more money enter the stream as compared to those that leave it. What are your thoughts regarding this matter? Do you think that the Feds could have done better in handling the situation? Let us know what you think by sharing them in the comments down below. We want to know your take on this. Also, if you have a few seconds to spare, please give this video a like and subscribe to our channel if you like what you're watching. We work hard to give you the best content, and it would be nice to have you in our community. So going back to the video, you now know how the situation is right now, and it feels like with all the big things that are currently happening in the crypto space, the Fed has completely left us in the dark, leaving us to stabilize the market and get the inflation rates being at a considerable rate all by ourselves. Is the lack of action from the Fed a glimpse of an even bigger plan that they hope to enact in the future? Possible, but that's not really what we should be talking about. Because we should be talking about how the lack of effort to enact this quantitative tightening could have resulted into an even bigger dilemma that might endanger the economy of crypto. If it reaches a point where the amount of money entering the space is too much to accommodate, it would be a devastating scenario. Too much of anything can be harmful, and that's applicable even in the economics of crypto and inflation. if the latter won't be controlled anytime soon, the growth that most of us have been hoping to see might just backtrack. The government's intervention in the processes and systems that are enshrined in the crypto space has been pretty obvious, and we see them in the policies and sanctions that they impose on projects that have done some pretty nefarious actions. Just recently, we reported in our video the fiasco between Tornado Cash and the Treasury Department, where the latter prohibited the former from operating and serving clients in the US after apparently being involved in the laundering of a total of $7 billion worth of virtual assets. This has earned various opinions from the crypto community, especially when the government's intervention has been rather assertive in terms of the sanctions they give. But right now, we are seeing an opposite behavior when matters concerning the rehabilitation of crypto's economy are being talked about, rather than seeing the same behavior from the government through the feds and seeing them actually roll out some steps in order to realize the goal of minimizing the amount of money in the economy. We are not seeing them do anything in particular that contributes to the inflation situation in the market. Again, the merge is something that everyone hopes to see successfully happen, and one of the things it hopes to see is the drop in the inflation rates in the market, possibly seeing a deflationary inflation rate. But this is something that might be hard to do as the inflation rates continue to propel and the Fed's balance sheet are nowhere near in terms of sizing down their balance sheets. This will be a domino effect that will not only affect present conditions but also future plans for other projects that may rely heavily on inflation rates. Both developers and investors should care so much for inflation rates, especially when they are determinants of prices and how they might change. And this industry is still a matter of risks and right timings. And that's it for today's video. I hope you guys found this content informative and helpful, especially if you plan on investing amidst today's inflation rates. If you did find this helpful, please do us a favor and help us by liking this video and giving our channel a subscribe. Also, make sure to keep your notifications on so you'll be updated whenever we post more content related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.